Look at that. On the dot, 2:30 p.m. here, 7:30 p.m. where you are, probably in the UK. Welcome to the, what would normally be Thursday, but is this week Friday, Financial Thing live stream. Unfortunately, I could not be here yesterday because I had to drive 9 hours for an appointment. And it just wasn't possible, even though I did think about live streaming in the car, but that might have been a little bit dangerous probably to do that. So hope you are having a great week so far. Almost the weekend. Thanks for joining. Please hit that thumbs up. If you can, I would appreciate it very much. We have a ton of stuff to get through tonight. A little bit of peer-to-peer lending. Kind of a quiet week in the news. Not really much to report. We're going to have a few little bits and pieces. But tonight, or today, what I wanted to talk about a little bit is scamming. What's going on in the scam world? Because somebody who is very close to me and near and dear to my heart is currently being scammed by somebody. And I just wanted to sort of talk about that and highlight some of the things that are out there designed to get you. And it can happen to anybody. It can happen to the most savvy of people. I've personally been scammed myself, not in this way, but through somebody collecting for a charity. This one, unfortunately, is much worse than what I experienced, but I think it's important that we talk about things because it does involve the financial side of things, the way that the scam works, but also the social aspect of how this scamming occurs. So I wanted to kind of give you a little bit of a detail on that so you can be aware and prepared if this ever comes across your life, which hopefully it won't, but chances are you probably know somebody that's been scammed in some kind of way. And I think, again, it's important to highlight these things. So we're going to jump right into it. Again, please subscribe to the channel if you haven't, and should be back Thursday for the Loanpad live stream next Thursday. So don't miss that. It's going to be a good one. We're going to ask Louis to give us an update on Loanpad, talk about interest rates, talk about investment interest, how we are getting very close to those interest rate savings accounts are paying, and the considered safer peer-to-peer lending methods of getting interest. So how is Loanpad addressing that, and what are they going to do in the future to kind of make that buffer a little bit more, because I think it is somewhat low at the moment, the risk to reward. Who do we have here today? We got Francais, bonjour. Jeff, I'm actually going over to France in December, so maybe I'll see you in Paris if you're there. J.M. Roberts is here in Toronto. We got Paul in Stockport. Paul Bagworth, of course, in Kenilworth. Don't know why I put that accent on. Mark Mason, go odd evening. All and Lawrence, I think, that's supposed to be good evening. Peter Vincent Leatherhead. Aki Chap in Accrington. Dave Dawson's here. Elvis P is here. Welcome, Elvis, back from the dead. Annabelle Nyron, hola a todos. Aren't we doing good homework? Our peer-to-peer homework on a Friday night and not down at the pub. Absolutely. Yes. That is good that you're not down at the pub. And JM, yes, I am with you. Holly has not been kidnapped. She is, where is she? She is down there somewhere. Where are you, Holly? There she is. She's been blocked by the chair tonight, my unfortunate positioning. And John Day is here in Nottingham. Welcome. Let's get right into it because we've got a lot to cover tonight. I don't want to be on for more than 45, 50 minutes to let you go. It's Friday evening. I'm sure you have many important things planned. Here we go. We're talking about this idea of peer-to-peer lending and whether the risk to reward becomes worth it through some companies. There is a interesting article that came out this week about, can investors beat inflation with the highest yield IFISAs? For anybody in the UK, that's the US version of a IRA. It's a tax-free investing account. With inflation hovering around the 10% mark, which is crazy, 10%. So much for transitory. Well, I guess it is technically transitory because transitory could mean that it can go on for years, but transitory, in my view, meant it was somewhat short-term, but this is not looking short-term at all. With inflation hovering around the 10% mark, investors may be looking to diversify their portfolios with some high returns. This article basically lists some of the higher returning peer-to-peer lending places where you can get inflation beating returns, which is very, very, very difficult nowadays. Capital Rise returns of up to 14% with a minimum investment of $1,000. Crowd to fund returns up to 16%, which is pretty high. And then Fund Ourselves returns of up to 15%. The interest rate for Fund Ourselves, I really don't know much about this company. But the interest rate the investor chooses determines the maximum borrower estimated default rate that they are lending to. For example, if you choose a 10% return, you'll be lending to borrowers with an estimated 10% chance of defaulting. That's a pretty interesting way of doing things. So I guess that correlates with the higher return that you are willing to risk to get, the higher default chances there are. So I just don't know that those numbers always really match up because, again, I've seen low percentage return loans default. So do your own research on that, please. Shojin Property Partners returns up to 5%. You got to put them in a min of $5,000 on that one. So that's a pretty hefty minimal investment amount unless you're well-to-do. I mean, you really need about 50,000 minimum to diversify correctly over about 10 loans. I would say 10 is really a minimum of what I think somebody needs to have to be diversified. So 5,000 minimum you got to have. I say 50 grand. 25,000 would be pushing it for diversification. So yes, there are ways to beat inflation using peer-to-peer lending, but just remember that when you're getting paid 14%, that or 16%, that the borrower is paying at least 18 and a half, probably closer to north of 20%. There are risks that come along with these high interest returns. So be prepared for some downside risk and possible defaults. Now, if we look at Money Supermarket here, you're still not getting really great rates here. There are a couple of other banks that are not listed on here. For example, I think Ford Bank is paying around 2.5%. Now, Interest Marcus the same. So these rates are a little bit on the low side. But if we're looking at companies like Easy Money, where they have a target rate of 4% for £100 minimum on Loanpad, of a premium 60-day access for 4.4%, there is still a little bit of a gap between these savings rates. And then the bigger question is, a lot of people are saying, well, if inflation is at 10% and savings rates are playing 2.5%, what are you supposed to do? And I think that, the problem is that you can do nothing and be punished by this high inflation rate, or you could do something temporarily while this inflation rate is as high as it is. And do I think the inflation rate is going to be high for a while? I do. But your other option is just to sit in cash and really do nothing, or to take some higher risks with some of these other peer-to-peer companies and spread your money out. I think if you were looking to get about a 6 or 7% return average, spreading your investments out over different forms, I think that would be a good target amount for returns at the moment. But hopefully this inflation rate will pass eventually and we can get higher returns, but we'll see what happens. Fintech is showing signs of a global boom. This is really kind of a article to show how in some of these countries that are really kind of suffered financially over the years, particularly Africa, fintechs are providing a way for people to be able to try to get investments on their returns in those types of countries, which is an alternative sector. So it talks about Africa here, it talks about Portugal having really big growth in things like fintech. And this was a white paper by MasterCard, by the way. Found Nigeria was the leading fintech hub, hopefully up and up businesses and not some of the other things we're going to talk about later. And then we have the Middle East, Africa, and Pakistan, growing also in the UK and the US. Plan chief, skyrocketing credit demand raises ethical concerns. Worsening economic conditions have led to skyrocketing demand for credit, but Plan chief Rob Pascoe, who, by the way, has been on the stream before, if you haven't watched that interview, go back into the archives on the YouTube channel. Speaking on the FinTech Walkabout podcast, Pascoe said the peer-to-peer consumer lending platform has to walk a fine line between wanting to provide low-cost credit to people and making sure that those who are already in debt are not just piling on additional borrowing. We're seeing enormous demand for products probably for the wrong reasons. A lot of people are trying to cut back on monthly costs. They want to cut back on energy, household bills, and credit is one of the few obligations they can refinance. You get some good cases and people who probably don't need the credit as well. There isn't much else they can do other than go on a credit management plan with a debt charity to restructure their debt as opposed to putting on more debt. And the Financial Conduct Authority is putting pressure on lenders to be far more careful about who they're giving money to. So there is this article talks about the ethical standpoint. I know some of you care about the ethical side of things. Is it okay to lend money to people with high interest rates? Because, some of these consumer credit peer-to-peer lending companies are lending at high rates. For example, the Money Platform, Planned, Unbolted, and there are ethical concerns if you are bothered about that, about people taking on this kind of consumer debt and what kind of financial difficulties are they actually experiencing at the moment. There's been some articles about this, about I think 7 or 8 million people in the UK struggling to pay their bills. They're going to go to places like these consumer lending peer-to-peer companies just to be able to get by, and then sometimes they end up just digging themselves in a deeper hole. So it's a tough problem ethically, I think. At least Planned is aware of it, and they are addressing these types of things. It's good to see that they're not just giving out money for the sake of giving it out to make returns, and they are addressing the ethical side of things. And right here is an article that identifies and really highlights that the FCA finds 7.8 million Brits struggling with bills just because of the obviously high inflation, high energy costs. So and it goes hand in hand with that article. And then here is another good article. It says diversification is key in protecting your portfolio from inflation. Again, it's what we talked about, sort of spreading money around to different places, like have some stocks and shares, have some cash, have some peer-to-peer lending, possibly some gold, silver, stuff like that. Just, if one sector doesn't do well, maybe the other one will come through, and protecting yourself in these economic times, because something is brewing. Something is bubbling, and we just don't know when that's going to happen. It looks like the UK is, I think, in recession, and probably a deeper recession coming. Moving on, this is a update that investor update that Loanpad sends out every month. I always like to read what they're doing. It says the loan portfolio is performing well. I'm pleased to say we do not foresee any material risk of losses. That's really important. There are currently 175 loans in the portfolio, with the average loan to value representing just 0.57% of your invested funds. The average loan to value is just 43%, with a maximum of 50% on any given loan, which we believe provides investors with a significant cushion against any possible drop in property prices. Since our last update, we've received a large number of loan repayments and have a strong pipeline of new loans that will complete over the next coming days and weeks. With interest rates rising, we have been increasing interest rates to borrowers over the last few months and expect this to continue over the coming months. We will also be switching to a more variable interest rate model on many new loans, which will give us increased flexibility in reacting to market changes. Now, does that mean that lenders are going to see increased interest rates on their investments? if there is some kind of a variable interest rate, will Loanpad make the product that they're giving to us a variable interest rate? So it'll be interesting to ask Louis about that when he comes on the stream next Thursday, 7:30 p.m. Tune in. As you may be already aware, our rates will be increasing on November 1st to 3.4% classic, 4.6% premium. So they're 3.2 and 4.4% at the moment. So, and then on the 1st of December, 3.6% classic, 4.8% premium. So, the premium interest rate of 4.8% I think is quite attractive. 3.6% classic getting a little better. I mean, for instance, access, as long as market conditions are there, is a pretty decent rate too. And then there he is, the new Prime Minister. What's he going to do for the UK fintech market? The one thing about Mr. Sunak, which I will say, and maybe not such a good thing, but he was a part of this big loan to businesses, the CBLs, the Corona Business Interruption Loan Scheme, where they lent out $78 billion to UK businesses, some of those businesses taking money in not a good manner and not repaying it, but people, obviously businesses needed to be helped at that time, so this guy was doing, I guess, what he thought was the right thing to do. But he says in this article, Sunak has been a long-time crypto evangelist, repeatedly saying he wants the UK to become a global cryptocurrency hub. He has a good understanding of crypto assets, and that would be a positive thing, I think, for the cryptocurrency industry. So we'll see what happens to him as Prime Minister. Goes on, hopefully can last more than just a few days, maybe a few weeks, hopefully, as Liz Truss did. This is the investor update for Assets Exchange. They are saying that they are hoping the recent market turmoil is behind us. So when they say markets, I presume they mean housing, maybe markets, or the stock market doesn't really say. But they're saying the main risk to house prices in the UK is not the prospect of a mild recession, which I think we're already in a mild recession in the UK, but aggressive rises in mortgage interest rates, which will make property purchases to many unattainable. I think they already are. We already seen the 10-year gilt here is now at 3.47%. If we look at 1 year, we've seen it rise from down here at below 1%, slipping over 4.4%. This was crazy in October, how it really spiked. You're going to see those mortgage rates are going to go up now because of the 10-year gilt rising up so much. I think mortgage rates are going to head towards 7%. So right now we've seen them in the UK go above 6%, which is up from 2.25% just a year ago, and that it will go up, I believe, even further. It says here, this is CNBC. We could be seeing an average rate of 7% into the new year. I definitely think that's happening. It's already happening in the US. The UK tends to follow suit. So, but that could present some opportunities for cash buyers looking to buy property in the UK, because I think that might cool off the demand. I don't know. The UK is a weird one because they just don't have a lot of places to build, and there's a lack of housing, but also these 7% mortgage rates are going to make home ownership for most people starting out to get on the property ladder with prices being so high unattainable. So let's see, it says this is the Assets Exchange update. Fixed mortgage rates are typically priced as spread over gilt yield, so we look at the 10-year. So this decline is good news for the house market. So you can see the 5-year gilt has actually come down some, but again, I think this may be short-lived, and I think interest rates are going to continue to go up as the government tries to battle inflation in a really poor manner that is obviously not working. But Assets Exchange has some things in the property pipeline. I know there's some fan of Assets Exchange out there, so it's a good to see that they're continuing to put properties into the pipeline. Somebody emailed this week and asked me about this Humus. It's AI, artificial intelligence trading. Typically, I find these types of things to be less than reliable. There are times, when you could do stock trading using automated functions, but generally you'd have to look at the performance of something like this over a long period of time, and unfortunately they haven't been around long enough to do that. I don't personally do things like this, but you just have to be very careful with things like this, because one bad day in the market, an AI algorithm can really kill you when it comes to trading, so be careful. Also, we're kind of all over the place today with the stream, so forgive me, but that's just the way it is. I provide information. For anybody that buys crypto, advanced trading is replacing Coinbase Pro. So as you know, if you looked at the video I made probably about a year or a year and a half ago about how you can save a lot of money on trading fees in Coinbase Pro, they're getting rid of Coinbase Pro, and there's a new way to buy inside Coinbase. It's been around for a few months, but it's called advanced trading. Let me pull it up for you so I can show you where to find it for anybody that buys cryptocurrency. And as you know, I have purchased things on Coinbase, and that's primarily where I got it from. Okay, so if you come up here in the home screen and you go to trade on the left side over here, I don't know if you could see that, it might be off the screen, but on the left side over here, yeah, you can't see it on here, but on the left side there's a trade. Is it cutting some of it off? Okay, so go to trade, and then up at the top there is a simple and advanced tab, which unfortunately, let's see if I can zoom out. Maybe that's not. Let's see if I zoom in. Maybe you can see it. No, for some reason it may be off the screen. But right here, advanced, if you just click on that, you can do advanced trading. It's the same fees as Coinbase Pro exactly. You can buy all the stuff that you would have bought on Coinbase Pro for the same low fee. I think it's 0.5%. So Coinbase Pro won't work anymore if you got money over there. They're just going to bring it over to Coinbase for you automatically if you don't do it yourself. I do suggest doing it yourself. And by the way, if you have a Coinbase account, I highly suggest, let me move this over and see if I can, so you can see. Yeah, this is the trade tab right here on the left. But I highly suggest going to learning rewards, click on that, and they give you free cryptocurrency coins, which you can then, once you get them, exchange for Bitcoin or Ethereum, or if you want to hold another coin. But it's free money, basically. You just take these short quizzes, and I think I've probably gotten about $200 or $300 US worth of cryptocurrency from these lessons, and they're really easy. You can't get them wrong. You just click start lesson and then answer a few questions. Let's do one right now. We'll answer a question. It doesn't even matter what you answer. You can answer the wrong one, just click through until you get the right one. Boom, there's your dollar in cryptocurrency. So don't forget to do that if you have a Coinbase account. Now I'm going to talk to you again about scamming. Cryptocurrency is notoriously linked to people scamming. There is a big problem in the world right now with scammers who are sending out unscrupulous emails. But not only from cryptocurrency, they're coming from places that look like Amazon emails. This is one I got a few weeks ago. It says your account has been disabled. What will I do? Blah, blah, blah. It wants me to click on this link to update my account. You can see it down here. Is that going to zoom in? There we go. If you get an email like this, just be very careful. And the way you can see that it's not actually from Amazon, even though they can cloak the email address to make it seem like it came from Amazon, if you hover over the link, at least in my email program, it shows me what link it's going to take you to. And you probably can't see this, but down here at the bottom where my mouse is, it's showing me the link is main dot, a bunch of jumbled letters.amplifyapp.com. So an obvious scam. A lot of people in the UK and the US have watched this video. It's called the Tindler Swindler. And this is unfortunately the way that this person I'm very close to in my life has been duped recently for a very substantial amount of money. Really, really unfortunate. These people are getting on these fake dating websites like this one, which you can't even see it because it's so badly proportionate. This is a website called D8U, so dateu.com. Now, I don't know if this website is a scam website, but there are plenty of websites out there that exist like this. They're actually developed and designed by scammers in foreign countries to look like proper dating sites, but the profiles on these dating sites are actually just scammers. Here is one such gentleman that I know is a scammer inside one of these dating sites. And a lot of the times they're very easy to spot because this is the title of his dating profile. There shouldn't be difficulty finding someone interesting. I mean, nobody puts that that's obviously a non-native English speaker who probably used Google Translate. But this site matched two lovers before my very presence, hoping for a story like that too. I mean, who writes like that? I like to receive a phone call or text message to let me know I was being thought of. The person that I'm going to fall in love with isn't going to be for what all that person can buy me. A lot of bad English there. Unfortunately, these scammers, they prey on people who are lonely, who are divorced, people who are elderly. I was actually talking to a friend of mine this weekend about this situation that the person I'm very close to is going through right now. And their elderly mother, who I think is in her 70s, has been a target of scams like this and has lost 6 figures plus to a person, pretending to be somebody that they're not. So these people, they get on these dating sites, they make these profiles, and then another way that these scammers really have started using, I would say over the last year, is they just send out random text messages. I actually got one this morning. It was just says, "Hey, how are you?" They're very, very random texts. They come from numbers that don't really make a lot of sense. They're usually these strange numbers. And then here's another one I got recently. It says, "Long time no see, Linny, how are you?" So they just will put in some random person's name, pretending like they texted you by accident and then tried to engage you. And then I said to this person, "I think you have the wrong person." And they write back, "I seem to have entered the wrong number. I hope I'm not disturbing you." Some nonsense here. "I'm sorry to bother you. I hope you have a nice day. I think we can also be friends, can't we? Hello, my name is Eileen." Well, most of you out there, I'm sure, are pretty astute people to know that this is just a bunch of nonsense, right? But there are very vulnerable people who don't understand this is fake. Here's another one I got. "Thank you." This is, again, just random, strange phone number. "Thank you. You have a great personality. Sorry to bother you." That's the first text. And I said, they said, "My name is Shirley. What's your name?" I said, "Hi, Shirley. My name is Crypto King. What's your name?" So I'm obviously goofing off. But a while ago, what I did was, when I found out that my close person was getting scammed, I wanted to learn, how these people were actually operating and what they were doing. And I had a conversation with one of these scammers for probably 24 hours, going back and forth. What they usually do is get you onto like a Telegram app. I just happened to respond to one of these random text messages that I got. It wasn't from a dating site or anything like that. And I went back and forth with this person, and eventually what happens is they say, "I've got a investment for you, and I can double your money. It's great. It's my uncle. He's a Wall Street trader." It's some really bad, terrible story that's put together. And then they direct you to websites like this one, which is actually down. This is the one I got direct to. It's called bitdeeps.com. I actually reported this to the web host and they took it down. Here's another one that I know is a fact, a scam. To an untrained person, this could look completely legitimate. This is called bixtrade.com. It's talking about trading cryptocurrency. And if you go to the About Us section, I mean, it looks like a pretty legitimate website until you start reading some of the text. You can just tell that it was written by a proper finance company. Things like, thus it brings profit both to the company's investors and the company itself. BitXtrade Finance works on mutually beneficial terms with its investors, who you can also become partners. Again, that's really bad English. And if you go down to the About Us or Contact, they usually have weird phone numbers. Like this one is supposedly based in Miami, Florida, but has a WhatsApp number with a 361 area code. Now, Miami is not, as far as I know, a 361 area code. And these could be in the UK, in London, just different places in the world. So this is where this one is based out of. It looks like a pretty shifty looking office building. So with a little bit of digging, it's quite obvious to see that these websites are fake. You can actually look and see when this website was created. It was created on February of 2022, so it's only less than a year old. And then the registration contact is in Iceland. So very, very suspicious. And there's hundreds of these websites out there. Here's another one, CoreFX Trade. And so basically, the way that the person that I know was scammed was they created like this, the scammer just started talking lovey-dovey things very fast through this dating app to the person, and she became very connected emotionally, and then came the, I have an investment opportunity for you, so probably within 2 or 3 weeks I can make you a lot of money. And then they send them to one of these websites which says you can make 1.25% a day. Crazy, silly, I think it's this one maybe that says you can make 2% a day. One of these websites is 2% a day. It's ridiculous, completely unreasonable. And I think the one she signed up for said over 60 days you can double your money. It's guaranteed. It was 100% guaranteed. This one says up to 20% daily earnings, so obviously a bunch of BS. So the person that I know sent a considerable amount of money, an astounding amount of money. I couldn't believe how much it was, to this person to put in as an investment. And the website was fake. Because I logged into it, I happened to get the login information. I could see the website was fake. It showed that their current balance was in there, but it had no activity in it at all. The balance was the same as it was the day it was deposited. There wasn't even a record of deposit. And then eventually that website got taken down, so it disappeared. You can see these kind of stories all over the internet. This is Reddit. My dad is currently in a romance crypto scam. So it's really sad, and these people, honestly, are just really the bottom of the barrel scum of the earth for doing this to people, because they are attacking people that are very, very lonely and do have, they just want somebody to be close to, and it's very, very sad. So the problem with these scams is that a lot of the times the person getting scammed doesn't believe that it's a scam. I've known somebody who's been involved in this scam on the victim side for many, many years and has never even met the person, but still believes, they're clinging on to that hope that this person is going to eventually meet them face to face and that they're real when they're not. Dumped a massive amount of money to somebody, to this scammer doing that. It's really very, 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 very sad. And even a visit from the local constabulary, the police, to the person that I know has not had any effect. it didn't register at all. The police came and said, this person is fake. They're scamming you. Stop doing it. Stop sending money. And the person I know just still continues to believe it's real. So I think, the reason I'm saying this again is if you are out there, just be very, very careful. Be aware of what's going on. If you ever get some weird messages like emails or you're on dating sites, nothing wrong with dating sites. Like most dating sites are legit. But if you do get some strange messages, especially anybody asking you for, starts talking about investing or that they know about investing, start asking for money, just know that 99% of the chance it is a scam. And you don't want to end up, like this guy. This guy's dad didn't seem to lose a ton, but he said maybe 18,000, which is, if you get scammed for 18 grand, that's a lot. But I know, again, somebody that's been scammed for over 100,000, and you just don't want that to be you. So please be vigilant, be careful out there. I know this is a peer-to-peer lending stream, but it's something that's been on my heart, so that's why I wanted to talk to you about it today. And the news was weak this week. There wasn't much to talk about peer-to-peer lending. Let's take a quick look, since we do have a bit of time. What's going on with the Trading 212 portfolio? I honestly am a total airhead because I forgot to make some more purchases at the beginning of the week. And portfolio has actually been okay. We're at 19,216 at the moment. Last week we bought a little bit of Walt Disney, which is up 3.6%. But we had a big day with Arch yesterday, even though they did report earnings and they missed. However, the stock yesterday had a big spike. See down here. Was it yesterday? Sorry, Wednesday. I'm off. It was on Wednesday. It jumped up all the way from 133 to 150 and is hovering around the 148 mark, which is making me look a little bit silly because I had, I think, about 7 or 8 grand of Arch that I dumped off because I thought the market was bad, and then it did go back down and I didn't buy back in, so that's okay. The other ones are doing okay. Synovus is up 10%, Flex 31% up. This drop definitely had somewhat of a pullback. As you can see from its highs up here at 24, we sunk all the way down to 14th. That was a big drop off. And then Disney, which has done okay. I'm still very nervous about deploying money into the market. I think we're still at a pretty high risk level at the moment because of what's going on. These crazy gilt yields going. I mean, we've seen I think you can learn a lot from looking at the debt market, looking at what's going on with the gilts in the UK. We could look at the 10-year Treasury yield in the US. I think we can get a really good picture of what's going on in the markets when we watch these numbers closely. We see these crazy spikes in these yield amounts, these Treasury gilts and 10-year Treasury bonds. It's a time to pay attention to that. That's a good indicator, I think, and with the strength of the currencies too and what's going on. So we've seen this spike 3.5 all the way up to 4.2 just in the month of October in the US. So pay attention to things like that. I really do think it's a good indicator. That's what's really making me nervous about deploying more money into the markets at the moment, is these Treasury yields just being so volatile. And we see the markets today doing some really, really crazy moves. We had Apple had a big spike today in the stock price. It's just not usual to see markets moving in this way, I don't think, so often. Let's have a look at the so we had the S&P up 2.3%, which is the FTSE up today. Good. FTSE 100, where are you? Yeah, FTSE's up 0.4%. Likely on Monday that one will spike too. That tends to follow the US markets in some ways, but yet a day later. It's just not normal to see these types of high movements. The volatility is very, very high. That's what's making me, nervous and sort of taking this cash position at the moment. I think if, you are trying to trade these markets, it's going to be in a very short-term movements. Maybe 3-month movements would be considered a long time. So, and I am not a trader by any means. So, I'm more of a long-term investor. I do use this portfolio to try to trade, but nearly all of my investments are long-term. So, I'm getting pretty nervous about the market still. Waiting to see what big boulder is going to roll down the hill and smash us all in the face. Because I know it's coming, and I think everybody knows it too. What time is it? 3:10. We shall see. Anyway, that's what I got for you this weekend. If you enjoyed it, hit the thumbs up. If you didn't enjoy it, hit the thumbs up. It's good for the algorithm. Let's see. Pizza, no, it's nothing to do with scam dog biscuits. It's a good reminder, though, I'm out of dog biscuits. I got bitten by a dog. I don't know if I told you that, but about 6 weeks ago, I was out walking that little bundle of furry love out there, and some little Yorkie ran up and was just kind of sat there looking at me. It was in the street, and I don't, I'm an animal lover. I like to see animals do well in life, and this little dog was running around. It had a collar on. I thought, oh, it's going to get hit by a vehicle. So I knock on the front door of the person that the dog was closest to, and the people open the door, and then as soon as they opened the door, the dog ran up, jumped up, and bit me in the thigh. And this dog was it was a tiny little thing, 5 pounds, about half the size of my little tiny dog. And unfortunately, sometimes these things happen. It's not fun, but just part of life. But I'm okay. I didn't die from rabies. That was what I was close to being worried about. John Day says, signs of savings and peer market changes. Sainsbury's 2.75, Santander, Easy Access 2.75 bonds. 1 year, DF Capital 9, 4 month, 4% for a month. All lasted only a few days. Yeah, that's the volatility of those debt markets. Patty, you're in Brittany. I'm probably not going to be in Brittany, only in France for a couple of days. I'm taking the Channel for the first time from London over to Gay Paris. Alan Straps says the rates quoted in that peer-to-peer article are nonsense. Yeah, it could have been an editorial. Robert Pates is here in Hornchurch. Welcome, Robert. Hope you're doing well. Santander 4.4% on its ISA. What does that mean? 4%, 4.4% what? For how long? Elfin Market Q gone to 0. More consumer loan demand or fewer lenders? Probably both. Time to be selective. Yeah. Alan says a high 23% is on offer on a PDL loan on CrowdStacker. It's pretty high up on the capital stack, so obviously higher risk. Can invest from £100. I mean, if you want to take that kind of risk, 23%, just make sure you diversify. Paul New, Sunak wants digital money. Digital money is really a very concerning thing. The reason I'm concerned about it is it would allow powers that be to track every single one of your financial movements. Totally not a fan. But I think it's coming. I don't know if there's a way to get out of it. Assets exchange have parent assets capital as living will. That's a decent extra safety feature. I feel for those families who are maxed out on their mortgage, now facing really big increases. It's going to hurt a lot. Yeah, I think it will. Lawrence, you should start a peer-to-peer dating website. No, thank you. Dave Dawson says, I had a chap from work lose a lot of his pension. I told him he'd been scammed, but it's hard to get through to them. Yep, he's exactly right. Somebody does, and this is the problem with the police side of things. The police can't do anything because it's a voluntary act of somebody giving over this money. It wasn't like they were defrauded or blackmailed. Person sending money voluntarily, then technically it's not a crime. If somebody's in a different country, they're probably not going to get caught. Patty, my trading 212 has swung wildly today. I'm 60% cash at the moment. Cautious as to the future of 2022 and 2023. Yeah. How's Twitter now? Elon has taken over. Nothing has changed. Twitter's the same. Big drop from Amazon today. Yep. Disappointing results. Good night, Elvis. Doesn't Elvis say good night, Miami, or something like that? Yeah, tech had a rough time today. Amazon was down, I think, earlier, 13%. So down 7.59 right now. Look at that, Amazon down 40% for the last year. It's crazy. But today down 7%. Yeah, crazy volatile swings. Such a big stock. Apple has I think Apple had a good day. Look, Apple up 7. And Amazon down 7. So, odd day. Odd day. So anyway, I'm going to get out of here. So yeah, next Thursday, please put it in your calendars. Be here for Louis from Loanpad. CEO will be here, all being well. We'll talk to him. Drop me a thumbs up if you can before I leave. Have a great weekend. Everybody enjoy yourself. Be happy, healthy. And money isn't everything. So, when I was driving, just last point, I had to drive 9 hours. It should have taken 5 hours. But about 2 miles in front of me, there was a nasty car accident. I saw the flames and the smoke go up in the air. And the 3 people who were driving perished in their car accident. So, every day is a blessing. Tomorrow is not given. There's more to life than money. So be happy, be healthy, take care of yourselves out there, okay? Love to all of you very much. Thank you for tuning in. I will see you next week for Loanpad on Thursday evening. Bye-bye.